Good day, traders. It's Wednesday, September of 27th. This is Alan Hong, market analyst of GKFXPrime. So I'm gonna share my daily analysis through this video. And first of all, let's review the major market movements. So first instruments we're referring here is the dollar index in 4-hourly chart. So the US dollars index rose against a basket of major currencies on Tuesday, up 0.31% to 92.73 as investors mull over the failures of Chair Janet Yellen's comments, reaffirming that the central banks feel that raising rates gradually is the most appropriate policy measures. So following an initial spike higher, the dollar eased somewhat as investors mull over Yellen's concern that the slowing pace of inflation could force rates to remain lower for longer, and this was reducing the central bank's ability to ease monetary policy at times of market distress. So the central bank president Janet Yellen said sustained low inflation such as this is undesirable because, among other things, it generally leads to low settings of the various rate in normal times, and thereby it's providing less scope to ease monetary policy to fight recessions. So Yellen's comments came just hours after the greenback struck off dual economic reports showing weakness in both consumer confidence and also the housing sectors. And according to the Commerce Department said on Tuesday, new home sales of the United States was decreased 3.4% to a seasonally adjusted annual rate of 560,000 units last month, which was the lowest level since December 2016. So economists have forecast the new home sales rising 3.3% to a pace of 588,000 units last month. And in a report, the Conference Board's market research group said its index of consumer confidence was decreased to 119.8 this month from a reading of 120.4 in August. So the pair of sluggish reports on economic growth failed, however, to spark a sell-off in the greenback as weakness in both the euro and yen kept the downside momentum. Meanwhile, the single currency plunged lower on Tuesday, with the pair EUR-USD fell to 0.41% to traded around 1.1798 as concerns over the political fallout in Germany persisted, and this was pressuring the single currency to a one-month low. So German Chancellor Angela Merkel now faces months of coalition talks to try to form a stable government, leaving investors worried that political uncertainty could hit the German economy. And political risk in Spain also weighed on the euro, with the Catalan government planning to hold referendums on whether to break away from Spain on Sunday, despite oppositions from Spanish authorities. So sentiment on the euro was also fragile after the European Central Bank President Mario Draghi said Monday that ample European Central Bank accommodations were still needed, and added that currency volatility is a source of uncertainty that requires monitoring. And the safe haven Japanese yen, it was remained weaker against the US dollars, with the pair USD JPY rose 0.42% to traded around 112.19 on Tuesday. So this was following the Japanese Prime Minister Shinzo Abe's decisions to call an elections a year early as he seeks a fresh mandate to overcome a national crisis amid rising threats from North Korea. As for commodities markets, the gold price was fell on Tuesday, down $12.50 or around 0.95% to traded around $1,298.89 a troy ounce, as December rate hike expectations jumped after various of Chair Janet Yellen said that central banks should be wary of moving too gradually on the interest rates to avoid the economy overheating. So in a speech titled Inflation's Uncertainty and Monetary Policy at the National Associations for Business Economics annual meeting on Tuesday, Federal Reserve Chair Janet Yellen reaffirmed the central bank's view that raising rates gradually was the most appropriate policy amid uncertainty over inflation. So according to the Federal Reserve Monitor tool now, nearly 18% of traders expect a December rate hike compared to about 60% a week ago. So Yellen's comments came a day after gold prices rallied sharply following escalating tensions on the Korean peninsula after North Korea said US President Donald Trump had declared war and that it would shut down the US bombers flying near the peninsulas. So analysts were quickly to downplay expectations of a prolonged slump in the gold prices, suggesting that safe haven demand could return as geopolitical uncertainty remained front and center. While the oil price was gained in Asia on Wednesday, rose 0.39% to traded around $52.08 a barrel as industry estimates on US inventories threw up an unexpected drop in supplies. So according to the American Petroleum Institute, the API estimates on Tuesday, US crude oil inventories was fell by 761,000 barrels at the end of last week, compared with a 2.296 million barrels build expected. So oil supplies at the hub of Cushing, Olakama was rolled by 1.1 million barrels, and official data will be released on Wednesday from the US Energy Information Administration, the EIA, and the API and EIA figures often diverge. So overnight crude oil prices settled lower on Tuesdays as investors appear to take profit on the recent rally that has seen oil prices hit multi-month highs ahead of weekly inventory data till Wednesday, expected to show crude oil supplies rose for the fourth straight week. So a day after crude oil prices jumped to a 4-month high following a threat from the Turkey president to cut off oil export from the Kurdish regions of Iraq, and traders appear to unwind some of the bullish bets on crude oil futures ahead of a fresh batch of US crude inventory data. So Turkey President Recep Tayyip Erdogan on Monday warned his country could close the valve on the pipeline that carries 500,000 to 600,000 barrels of crude per day from northern Iraq to the Turkish port of Ceyhan. So the potential supply disruptions, however, was weighed against expectations of an uptick in US output as disruptions to US refinery activity due to Storm Harvey continues to pressure demand for crude oil and aiding to excess supplies. So now we're gonna review the highlighted economic data that released on yesterday's Tuesday, as well as the today focus data and economic events. So yesterday, New Zealand has released its trade balance for August, and which is slightly wider than expectations with negative 3,200 millions. All right. So besides of New Zealand, United States was released a series of data including the CB consumer confidence and new home sales. Right, so the CB consumer confidence for September in United States would show a result of 119.8, which is slightly lower than the expectations. And for the new home sales, it was only at 560,000 units, which is lower than the expectation as well. Okay, so the last data on yesterday is the weekly crude oil stock data from the American Petroleum Institute, which show a result of negative 0.761 millions, which is considered a surprise decrease in the United States stocks. All right. So as for today, we only got a series of data that will be released by the United States later tonight, alright, including the core durable goods order for August as well as the pending home sales for August. Okay, so besides of the United States, the crude oil will be gotten data which are expected to bring impact to the oil prices, which is the crude oil inventories that's going to release by the Energy Information Administrations of United States, right? So it is expected to build smaller than previous with only 3.422 million barrels. Its technical analysis sessions now, and first instruments referring to the Great British Pounds against the US dollar pair in 4-hourly charts. So the sterling was fell through the support level of 1.344 against the US dollar, and the fast moving average lines we can see that has shifted its directions to pointing downwards. So it is a signal to retrace more in short term, and probably it will fall towards the next support level at 1.332. As for the upsides, we could refer to the broken level at 1.344 as its first resistance level. the single currency was plunged lower on Tuesday against the US dollars as the concerns over the political fallout in Germany persisted, and it was pressuring the single currency to a one-month low. So the pair EUR-USD now is traded near to the support level of 1.175, and falling through this level is suggesting for further downside, and we could refill the next support level at 1.167. So for the upside, the first resistance level comes in at 1.182. While the Kiwi was set lower on Tuesday, with the pair NZD-USD traded a tad below the resistance level of 0.723 and remained in a downtrend structures. So it is expected to fall further and retest the previous low at 0.713 as the both movement lines showing the MACD indicator were pointing downwards. So on the upside, we could refill the resistance level at 0.723. And the Aussie was continuing its downside on Tuesday following a closure below the support level of 0.793. But however, it is still considered in an uptrend structure, so the recent plunge will be a short retracement of it. And with another closure below 0.781 of support level, will provide another signal for further downsides, and we could refill the next support level at 0.773. So on the upside, the first resistance levels will be comes in at 0.793. The safe haven Japanese yen was continued weaker than the US dollars following Japanese Prime Minister Shinzo Abe's decision to call an elections a year early as he seeks a fresh mandate to overcome a national crisis amid rising threats from North Korea. So the pair US dollar against the Japanese yen was settled higher on Tuesdays, jumped back to the previous high at the resistance level of 112.7. So closing above this level, we're suggesting for continuation of uptrends, and we could refer the next resistance level at 114 as a long-term target. So on the downside, we could refer the nearest support level at 111.5. While for commodity markets, gold price was fell on Tuesday as December rate hike expectations jumped after Federal Reserve Chair Janet Yellen said that central banks should be wary of moving too gradually on interest rates to avoid the economy overheating. So the gold price has fell back and retested the previous low at $1,292 and closure below the Fibonacci retracement level of 50 or the price of $1,280 will be a signal of shifting trend directions become downtrends. Then it will be expected to fall further towards the next support level at $1,263 a troy ounce. So on the upside, the nearest resistance levels will be at $1,300, while the United States is due to release a series of economic data later tonight, including core durable goods orders and pending home sales. So both of these data might bring further momentum to the dollar denominated assets like gold. And crude oil price has gained in Asia on Wednesday as industry estimates on US inventories threw up an unexpected drop in supplies. So the West Texas Intermediate crude price remained traded near the recent high at $52.40 a barrel. So the both moving average line can be seen was continued pointing upwards, and this taken as a signal to remain its uptrend structures. So with the price closing above $52.40 a barrel, we're suggesting for continuations of uptrends, and we could expect it to jump higher towards the next resistance level at $53.70 a barrel. And on the downside, the first support level comes in at $50.80 a barrel. So however, oil traders will eyes on the crude oil inventories data which due to release later tonight by the Information Energy Administrations of United States for further indications on the global supply level. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.